Welcome back to the Vital Strategies Podcast. I'm your host, Patrick Lonergan, and in today's episode, we're diving into the world of finance with one of our very own. Ryan Johns is a financial advisor on the Vital Wealth team. Ryan brings a unique perspective to the table, having transitioned from a career in law to thriving as a financial advisor serving entrepreneur clients. Together, we discuss the entrepreneurial journey. We dig into the ideal setup for what your advisor team should look like and how your advisor team evolves as your wealth and complexity grows. Stay tuned as we discuss the stages of growth, explore the increasing importance of projecting cash flow, and how our innovative cash flow calendar can revolutionize your financial management. Ryan offers real-world examples and practical advice on tax strategies and the power of being proactive rather than reactive. Let's dive in with Ryan Johns. Ryan, thank you for joining us today. I'm excited to get into this conversation about what we call the entrepreneur private office. But I'd like to take a second and just introduce you, and then you can
Sure.
tell us a little bit more about your background. So you're an advisor on the Vital team. So we love having you on board. Love having you work with our clients. Can you give us a little bit of your background?
Yeah, absolutely. I've been in the financial services world working with business owners and high net worth executives for about a decade. Have a financial background, accounting degree, and MBA from my alma mater, Florida State. Before entering the financial world, I worked as litigation attorney, so that gives me a unique perspective. I like to tell people I'm a recovering attorney. I don't quite do the same thing anymore, but I still have a good understanding of insurance policies and contracts and all of the different corporate structure questions that come up.
Yeah, fantastic. And we appreciate that diversity in your background. In the work we do, we talk about the four cornerstones of wealth building. There's cash flow, there's tax savings, there's investments, and then there's protection. Right. And protection is, that those legal structures, and then some of your experience in the litigation and insurance side of things, I think, comes into play there too. Insurance is an important.
It sure does. I
So.
spent about 7 or 8 years litigating insurance claims, some injury claims, but a lot of business disputes as well. So I've seen the other side of it.
Sure. Yeah. So I'm excited to get into our discussion today. I thought it would make sense for us to really talk through, the entrepreneurial journey and what an advisor team looks like for an entrepreneur as they sort of move through these different steps. I think there's probably 3, maybe 4 different phases, but I think we start off and there's just I'm getting started, bootstrapping, trying to get the business off the ground, turning a profit. Then we move into the phase where it's like, okay, I'm making a little money. This isn't a side hustle anymore. I'm able to put some cash in my pocket and make a living. And then we sort of move on to the third phase where it's like, no, this is a going enterprise. It's got real economic value. We're concerned about the enterprise value of the business and how to increase that. And in each one of those phases, we end up with a whole different set of problems. And I would say maybe the fourth phase could possibly be like, okay, I'm looking to exit. I've got a mature business and we're going to move on somewhere else. That's probably, a conversation for a different day. I think if we keep our focus and attention on sort of those first 3 phases, it can be...
There's a lot to dig into just in those first 3 phases. And I think what's interesting is if you ask somebody what the ideal advisor team would look like for a successful entrepreneur, they might be thinking, well, what do some well-known, very successful business owners do? What's their setup? Well, their setup that they have presently, now that they're successful, looks very different than when they were starting out, setting up out of their garage, even if they even had a team, right?
Right. Yep. And I think that's a really important distinction because I read some of these business books and it's like, oh, hey, go hire the best advisors. And I think there's some truth in that, but I think you need the best advisor for where you're at in your business. To some level, spending, like we have some clients that are spending tremendous amounts of money on legal fees. And it makes a lot of sense for them because it's saving them millions of dollars in estate tax and protecting this very valuable asset. But I don't think that's something that a new entrepreneur should be spending a lot of money on. There's probably a more economically efficient way to do that. So before we get too deep into the legal fees and that type of thing, I think it makes sense for us to maybe work through those four cornerstones. Where do we start with cash flow, tax savings, investment strategy, and then protection piece? So let's just start off with cash flow. When I think about setting up our cash flow structures, who do you think is a good advisor to have on your team when you're just getting started?
Yeah, I mean, I think you've got to have good bookkeeping, right? Mm-hmm. You have to have somebody that can produce accurate documentation of what's happening within the business. So you've got good data. You can make good decisions based on that.
Yeah. And one thing that we found is a very effective tool, and almost all of our clients use it, is QuickBooks Online. The cool thing about it is it interfaces with all of the bank accounts and that type of thing. You can give access, like all of our clients give us access to their QuickBooks just so we can see real time what's happening in their business. It's almost like having, I don't know, live feed into their blood work. If we're thinking of it from a healthcare perspective, it's like we know moment by moment, if anything gets a little bit sideways, that we need to start paying attention to those things early versus waiting until there's a big problem. So yes, I think QuickBooks Online is a great resource. Having a bookkeeper, I think from my perspective, finding a part-time, just paying somebody a few hours to like keep your books up to date is really a critical, should almost be the first hire. I don't know. We see clients that I would rather a client spend their time looking at the reports versus creating the, reconciliations and all those other things. Just there's enough things to do in the business that spending your time on bookkeeping isn't one. So that's good. Okay, so we start off. We hire a bookkeeper, get QuickBooks Online. I think that's a foundational place to get rolling with when you're first starting your business. How about tax savings? When we think about the tax piece, where do you think where do you think clients should go from there, entrepreneurs that are getting started?
Yeah, I mean, I think there's some basic strategies that they can take advantage of. In fact, I know that we've got a free resource that people can access and take a look at to hear some of this stuff.
Yeah. That's at 5minutetaxmakeover.com. Like, we think every entrepreneur should use these. We use them with our clients making $5 million a year, the level 1 strategies. We help them execute on all those, but we've made all those resources available. Can save clients, I don't know, $10,000, $15,000 in income tax, just doing good administration and bookkeeping type thing. So you can find those things at 5minutetaxmakeover.com.
Right. And
that's a great resource.
And to your point, the building block that comes before that is the good bookkeeping to get the good data, right?
Mm-hmm. Yep.
And then after that, I think most business owners know that at some point they'd like to have some retirement savings, and there's some tax efficiencies in having a retirement plan, even if it's a solo K.
Yeah.
Just a really easy to administer retirement plan where you can get some tax deferred growth.
Yeah. And so you bring up an interesting point. I'm an advisor. I look around, I see financial advisors have these like minimum assets under management thresholds before they'll take on, certain clients. What is the best place for somebody to get started with a solo K or a brokerage account or something along those lines?
Yeah, I think initially you don't need to overcomplicate things. The most powerful element of that is the discipline to get dollars set aside. And so how do you do that in an easy way? It can be as simple as partnering with an institution like Vanguard, where you've got a target date fund, that adjusts on its own as you get older, and you're just getting those dollars in there. You don't have a real complicated allocation within there that you have to feel like requires a lot of attention from an advisor. And because of that, it's low cost.
Yeah. No, that's fantastic. And I think that also ties back to a cash flow piece that we like to look at as sort of the second level, maybe the third level of cash flow, is like, let's create some automation. So it is so powerful to have dollars every single month, even if it's a small amount, going into those either brokerage or solo K, 401k, or SEP IRA, or simple, whatever plan you think makes the most sense, getting dollars just automatically going in there. Because the thing that we find is when we start prioritizing our expenses and we wait to save until we see what we have left over, there's just nothing left over, So it's like, if we put that at the top of the list, it happens. So yeah,
It's the
sorry, go
idea
ahead.
of it's the idea of pay yourself first, right? Prioritize that, right?
Yep,
So let
absolutely.
me ask you, if you've got somebody who's saying, okay, I'm tracking with you, I've got decent bookkeeping, I feel like I can get some money into a solo, okay, maybe, but what
Hmm.
if I need capital?
Yeah,
Like what if I need funds to invest in the business or do something else with it? Now it's in the 401k. What do we need to be thinking about?
yeah, that's good. I think there's probably a level of I would probably start with some automation to a money market account that is not tied to my bank account that I can't go just like suck it out and grab it. So we think, that disciplined savings, we set minimum and maximum thresholds for liquidity. And it's the number one reason that businesses go out of business is lack of liquidity, lack of cash on hand. It's the least sexy thing we do, but maybe the most important for our clients is we protect that liquidity at all costs. And so I think the first step would be set up some automation, but have those dollars directly going into a money market account. Again, you can do that at Vanguard, have it tied to a brokerage account and just have it going into money market. It could be at Schwab too. We use Schwab as a custodian, and you can set up your own portal there and just have those dollars go to Schwab. Right now, we know the Schwab, as of this recording, is paying north of 5% on the money market. So that's a great place to just park money and start building your liquidity. And then once you hit that minimum threshold, and I think a thought that we have there is if you're just getting started, about 6 months worth of living expenses is a really good minimum threshold. We like, as again, the business grows, and we like to see 1 year's worth of living expenses is just like our rule of thumb. Now that number can go up if you've got lots of payroll and that type of thing. But if we're just talking standard advice, we think starting off with 6 months worth of living expenses, just stuck in that money market, growing that to a year. Then we start funding things like retirement accounts and
Yeah.
whatnot afterwards. But those give you that pool of money if I need to make an investment in the business, whether it's a capital investment or human capital. I need to hire somebody. Unfortunately, when you hire people, they're not always generating profit for the business in the first day. So it takes a little time to make sure that you've got dollars set aside for that payroll piece. So yeah, I think the automation is good. And then once we hit those thresholds, we flip over from the money market to the retirement accounts. So
Yeah. Yeah. And so that kind of dovetails from tax into investment. We've got a tax efficient
yeah.
investment that we're working on. Outside of the 401k, at what point is a business owner, is there a particular revenue goal where a business owner should feel comfortable reinvesting in the business?
Personally, for most of our clients, the business is the thing that drives both their cash flow and their net worth. Okay. So it's hard to tell clients not to reinvest in their business. I do think there is a threshold where, not necessarily a threshold, I think it can make a lot of sense to start investing outside of the business. If we fill up that retirement account, we can't put any more dollars in there. Now we start putting dollars into a brokerage account. And that can give us some flexibility down the road to pull those dollars out for capital investments. It can allow us to reallocate those dollars to tax strategy. But I really do think if I'm thinking through the different levels of investment, I want to start building a brokerage account equal to 1 year's worth of income. That should be a threshold that we're shooting for.
Right. And this is separate. This is separate from what we were talking about a moment ago in terms of having liquid cash on the sideline.
Right. Absolutely. And the reason being is the liquid cash is there to handle fluctuations in the business. The additional liquidity, the reason we like it is it's an additional buffer if we need cash. Okay, things really go sideways. We've seen that through COVID. We've seen it actually through too rapid of expansion. Right. The problem with entrepreneurs is they have more ideas than they have time and money to execute on all those things, and so they will like maybe overestimate the profitability of the business, and so they make some either key hires or make some acquisitions, and then all of a sudden things didn't go as smoothly as they like. They start working through all that liquidity, and we need another source. And so that brokerage account can be a really nice backup. And then we also look at if things go sideways in the economy, okay, your liquidity will help protect you through the ups and downs of the economic challenges. But there might be some opportunities with your competitors that didn't have proper liquidity, and now you can come in pennies on the dollar, buy up some of those assets, and that might be bringing some of those dollars out of the brokerage account and just going, all right, hey, I know I can turn this into 30, 40, 50% return on my money because I can buy this and plug it into my business and go immediately. So we think those liquid sources are just critical for business owners to have access to.
I think we touched on it before. I don't know if we kind of got here conceptually, but all of the things that we're talking about doing, at least at this stage, you've got good bookkeeping and maybe you hire somebody for a couple hours a month. You want to automate cash flow. Okay, well, that's still the business owner saying, I'm going to be disciplined and automate cash flow. We talk about investment and you say, well, let's just get a basic solo case. So these are all things that we're asking a business owner to do on their own.
Yep.
And we've talked about the idea of a private office, an entrepreneur's private office.
Right.
And that's the idea that somebody's working on all of these things for you, but where we are so far in the conversation is the business owner's doing all of these things. So when do we get to the point where it's time to start engaging with the real deal? You need to get the attorney involved. You need to get the investment advisor involved.
That's a great question. And we think early on, there's just not the free cash flow to go hire expensive advisors. And there's also the reality that your complexity isn't to the point where you need to go find somebody that can, from a macro point of view, look at everything. So we think clients often cross over that threshold of, hey, I need somebody that can strategically come look at these things. I need to switch over from that how to somebody a who that can show up in my life and execute on these things, because the complexity has gotten beyond what I can handle with a quick Google search, because there's so much going on between all these different areas that it's a challenge. So I think there's probably a threshold around 150,000 maybe of net income to the business owner. Okay, we're entering in sort of a new level of tax concerns there that need to be addressed. I've got some hopefully some free cash flow. I may have to make some changes in my legal structures that affect my tax situation. And then the investment strategy, we start saving real dollars. The target date fund was a great place to start, but it's not the best long-term portfolio. There's some fine tuning that can be done there that can make a real difference in somebody's upside and managing the risk. That didn't make a huge difference when we had a few $1,000s in there, but when we've got a few $100,000 or $1 million, now there's some additional guidance that would be worthwhile. So now we're starting to look at, okay, let's bring in and one thing I think we could go back and touch on is just the CPA that we're working with. Generally, whoever was, we think a CPA, once you have a business, makes a lot of sense. Before that, you can probably file on TurboTax. You can use H&R Block. No problem with those as solutions. But as our complexity levels up, we need to go find somebody that is used to dealing with business owners in that arena. Now, I also want to make sure that clients understand the role of the CPA. Their job is to get the right numbers in the right boxes, okay? That's how their business model is designed. They may come to you after the fact and go, hey, I put these right numbers in these right boxes. Next year, you should consider this thing, okay? And that is very much a backwards-looking strategy. Okay, here's what you did last year. If you keep doing that this year, here's the things that you could implement. And that's sort of the best case scenario with CPAs. Their business model is not designed to meet with you in June and July and go, hey, we've got 6 months under our belt. Let's take a look at where your business is going. Let's take a look at your goals. Let's go find a third party that can help you execute on a tax strategy. And oh, by the way, let us help you manage the cash flow to be able to get to that point. That's just not inside of their
Yeah.
their world that they live in. So yeah, so I think there's a level of like, finding somebody to outsource the entrepreneur private office to that can look at all of these different pieces, the tax, legal, investments, insurance, and make sure that all of the strategies or the tactics are working together in a strategy. So
Right, because we're talking about as you're growing and scaling your business, you have less and less time to do all of these very important things. Our cash flow, tax, investment, protection. You were doing them before, but you're just running out of time. And so you can go and you can find those advisors that are very competent, but who's driving the bus,
yeah, yeah,
right?
absolutely.
Who's taking the holistic approach to say, let's make sure everybody's talking and they're not kind of driving in their own lane.
Yeah. Yeah. No, that's really good. So one thing that we've touched on, but not spent much time talking about yet is protection. So let's say I'm a new entrepreneur. I've started my business. Who should I have on my team as far as an advisor goes in those areas of protection that would make sense?
Yeah. And I think we talked a little bit to your point about legal, right?
Mm-hmm.
You want to make sure that you have proper estate planning documents put together. And we've talked to clients who have started out with LegalZoom,
Mm-hmm.
and they've got a will and they've got a healthcare surrogate or medical power of attorney and a general power of attorney. Maybe they've got a trust put together, and they've got the basics in place.
Mm-hmm.
And maybe that's fine initially. But as things become more complex, you need to have somebody take a look at corporate structure and how you're holding, whether it's investment real estate or your business, how are you holding that asset and what happens if something happens to you in your state? Right. And what are the liability concerns where if you're incorporated in one state versus another, do you have stronger protections in one versus the other? As your picture becomes more complex, you need to have an attorney, not just an estate attorney, but you're going to have a corporate business transaction attorney.
Yep.
And then from an insurance standpoint, when we first start out, you've got auto, maybe you've got a fleet of vehicles and you can work with somebody who can help you with the fleet, make sure you got proper coverage in place. But it's more than just auto, homeowners, umbrella policy. You need to start looking at some businesses' errors and omissions, business coverage. And oftentimes we find that when you're first starting out and you're meeting with your insurance agent, they can cover a few of those things. But it's a good idea to shop around and make sure you have somebody that can handle the specifics in your industry, with your coverage type, et cetera.
Yeah, no, that's a really good point. And I think back to your comment about, we've had some clients come to us that got started on LegalZoom. Like, I think it's okay. It's better than if I had to set up an LLC or a will or what have you. That's better than nothing. But we've also seen an example of a client that was saving a few bucks on legal cost, and then he got into a transaction, and our client was on one side of the transaction. This was not our client on the other side of a transaction. And for about $400, he probably could have had an attorney take a close look at all of his stuff, make sure that the operating agreement was buttoned up, make sure that the company that was being merged into this other company was actually owned by himself. And we found out after the fact that the company was not owned the way he said it was. Him and his attorney signed a document because the legal counsel that we brought to the transaction on our side said, hey, this is going to be a problem if it's not done right. And it ended up being the problem, if we didn't get it resolved, was a $2 million tax problem. So instead of spending $400 on the front end, we were looking at a $2 million tax problem on the back end. And it's like,
that's right.
Okay, so an ounce of prevention in that case is worth a ton of cure on the back end. And so we just want to make sure that, we're, again, no problem with LegalZoom. I'm sure it's better. It's absolutely better than nothing, but spending a little bit of money, a few $100 on the front end, getting operating agreement, LLC, some of those like base level things done well is, again, worth all of the investment so we don't end up with massive problems down the road.
I may be a bit biased. I'm going to add a little bit to that. I might be a bit biased when it comes to having kind of form documents put together on your behalf. And the reason is because the attorneys are schooled in the proper questions to ask to understand your situation to a greater degree. Yeah. And that's true on the basic estate planning side to say, oh, well, you selected the following documents to put together, but have you considered this? And the example that you just gave is the same situation where an attorney who was asking the proper question could have saved a lot of time and money, but on an even greater scale.
Yeah, absolutely. Good.
It's better than nothing. I agree with that.
Yeah. So let's just sort of recap the entrepreneur that's just getting started, what their advisor team looks like. So on the cash flow side, we're getting a QuickBooks Online account set up, and we'll have a link to that in the show notes. It starts off pretty simple. We find a bookkeeper that can just make sure all the transactions come in, they're categorized correctly, accounts are reconciled, like get those pieces buttoned up. On the tax side, I think having, whoever's doing your taxes currently, as long as it's CPA, it's probably okay to keep them, on the team and keep things moving. On the investment side of things, again, Vanguard, Schwab, just doing it yourself. It's okay to get those things set up, but I think it makes a lot of sense to automate it just every single month, having it pulling dollars out of your account, paying yourself first, like you mentioned, is key. And then when we look at the protection side, on the legal, getting some basic documents put together, some estate planning documents, will, trust, power of attorneys, living will, there's sort of a templated package that most attorneys have that makes sure all of those pieces are taken care of. And then on the business side of things, just having an LLC set up that has the proper operating agreement that's going to handle, where you're at in your business life cycle. And then the last piece, finding a business insurance broker that can just take a look at everything you've got going on, because we don't need some sort of, we think about the point of insurance. It's there to cover catastrophic situations, right? That's going to put me out of business. So they're just looking at everything you've got going on and making sure that they're managing the risk. And you've got appropriate coverage.
And you're, it goes back to the beginning. You have appropriate coverage. You don't want to overinsure and have a cash flow problem, but the proper coverage will protect your cash flow and keep you liquid.
And I think one last piece, we haven't really touched on this, but just some basic term insurance for life insurance is good. There's lots of discussion out there about this whole bank on whole life concept. We should do a whole episode on a whole life policy. Because I think sometimes it's oversold as this financial magic. At the end of the day, it's like a bank account with a death benefit tied to it. So with not a lot of flexibility baked into it. So personally, I'd rather have a bank account and some term insurance as we get started. Now, we have clients that are funding $1.5 million a year into a permanent insurance policy. So I'm not opposed to it by any stretch, but I think we just need to make sure we're understanding the right tool for the right time. So now the entrepreneur's on the journey. It's working. They're making some money. They're let's say they're moving past $150,000 a year. They're into $250,000, $500,000. Let's start thinking about what the team needs to look like as they grow into that range. So if we start with cash flow, what do we need to start paying attention to on the cash flow side of things, both from how we do things to maybe the people that are on that team?
I think liquidity is still an issue, but the potential for larger, potentially surprising obligations becomes greater.
Yep.
And so not just bookkeeping, but projecting your cash flow and projecting your liquidity balance over the next 12 months, let's say, becomes something that can help you sleep at night and also a helpful planning tool.
I couldn't agree more about what we call the cash flow calendar. We like to build out the cash flow map and the cash flow calendar. The map shows us where all the dollars are coming from. And as our enterprise grows, we might have dollars coming out of the business. We might have some investments that are kicking off cash flow. We might have real estate that's paying us, maybe a spouse that has W-2 income. And the map can help us sort of understand where all those dollars are coming from. It can also give us some insight into the tax treatment of those dollars, which is important.
Can you kind of give us a picture, just kind of describe that cash flow map and why it's so, because clients love it. Right? Yeah. It's a snapshot, but help us understand what that looks like.
Yeah. So we'll put together a sample of this and make it available in the show notes for people to download. But really on the left side, we have all of these green boxes that are our income sources. It could be just the business, okay? That could be the one green box. Or we've had clients that have had dozens of boxes over there because they have lots of different things going on. Now,
right.
A little
different
aside,
entities.
Right. Focus matters. And we should focus our attention on one thing versus try to have 12 things going. But sometimes naturally the business spawns these different cash flow sources. So that's sort of on the left side of this sheet. As we move to the middle, we call the sort of central hub is the cash management account. When we think about a lot of the work we do for our clients, it's actually pulling the levers for them with their approval, obviously, but moving the dollars from place to place to execute on tax strategy, investment, liquidity, all of those different pieces. And then after the cash management account, we start moving a little farther to the right. And we really have sort of three different categories that dollars fall in. There's living expenses. And we've talked about this a little bit. Our entrepreneur clients that make $1 million a year typically spend about 30 grand a month on living expenses. Then the next bucket is the tax bucket, okay? And we show how many dollars are going to the tax piece. Usually, again, client making about $1 million, that's about 30 grand a month. And then there's the free cash flow, which is the third bucket there that is just allocated towards investments, okay? And now that investment could be retained earnings that we're going to use in the business, or it could be going out of the business to real estate projects, brokerage account, tax strategy. It could be going lots of different places. So Then that's the farthest right. Where are all those investment dollars going? They're ending up in those different buckets. And it's kind of a nice visual to go, oh, geez, I'm putting a lot of money in this thing and not so much in this thing. And foundationally, there's some truth to how we should do that. So let's maybe move some of those dollar figures around. And then an interesting exercise that we go through with our clients is we create a second cash flow sheet, cash flow map, that it starts to illustrate the tax savings. Okay, so we go, here's how we're going to attack the tax number. Right. And we go back and we do some of the research on the amount of tax we've saved our clients, and it's hundreds of thousands of dollars for our high-end consulting clients. And so it's like, okay, that moves into a fourth bucket that is just new discretionary, that we get to decide where those dollars are going to go. And it might be a home remodel, it might be tax strategy, it might be business investment, where we really have lots of flexibility on where that goes. So the cash flow map is an awfully interesting tool just to give us a visual for where all the money is actually flowing. So,
and that's what I really like about the cash flow. There's the cash flow map. There's a lot of information that goes into building it, but it creates a single picture, a snapshot to say, here's what's happening. Here's the money flow, right?
Yep. And one thing we found is attorneys love that document when they're starting to work on the estate planning pieces and asset protection pieces. They're like, oh, okay, cool. I can see in one visual like where all these dollars are going, and then they can start to maybe reorganize things and go, hey, this needs to be a holding company, and these entities can move underneath there. So yeah, it's a valuable tool across the board for our clients and their advisors. So
I'd like to talk through the cash flow calendar a little bit as well. Yeah. Would that be all right?
Yeah, that's great. And I think this, again, is maybe the most valuable tool we use with our clients, and we use it almost every single month when we meet. So I'm going to go back to the fact that all of our clients connect us to their accounting software. Most of the time, that's QuickBooks. And so we can go into QuickBooks. We also have links to all their bank accounts that we can see real-time balances. And so we can update the current liquidity levels in the cash flow calendar. And we're working on a tool here that we can make available to people. This is a more complex tool that is hard to just give to somebody and have them understand what it is and how it all works. But
yeah, there's a lot of pieces getting built in behind the scenes there.
Yeah, I would love to figure out how to create a sheet that just sucks in all this data from all these other places. But right now we have data aggregated in places and we bring it in, but it'd be nice to be able to have it automated. But so to start off at the top of the sheet, we've got just where is our income? Where are we going to be from an income perspective? And all this data is coming off of the cash flow map. So the figures just keep flowing through. So income, what are our lifestyle expenses? What are we spending on lifestyle? Again, coming from the cash flow map. What is our tax bill? Shows up. And then the cool thing about the tax bill is it sets the quarterly payments that are due, puts those in the appropriate months, so we know like, hey, in those months, those dollars need to get out to the IRS, and we've got a strategy for setting those dollars aside. We're not just spending them on new opportunities. So, and then on the sheet, it gives us a month by month free cash flow that we have available. And we also have all of the liquidity sources prioritized. So it starts off with bank accounts. It's the most liquid. If we need dollars, that's where we're going to go get it. Second, we beat up on life insurance just a minute ago, but cash value in a life insurance policy is a great liquidity tool. So that's second on the list. Then we start looking at a few different things like security-backed lines of credit. We'll just call them lines of credit, both personal and business. And then there's Roth dollars. We've got a brokerage account in there after the life insurance. And then we've got lines of credit. Then we go to Roth IRA. Cool thing about a Roth IRA is my contribution dollars I can always get back out. Now, I love the Roth IRA because it's tax-free growth. But if I really, really need the dollars, I can go get them out of there. And then finally, we have pre-tax investments. This can be the most expensive money that we go get, but we like to have it on the sheet. If I really need the dollars, I'm going to pay tax and penalty on those when I pull them out. So probably not the best place to get dollars, but it is an option. So we have all of those listed there. And then on the bottom of the sheet, month by month, it just shows us projected net cash flow and how many dollars are getting added into those different buckets. And in the middle of the sheet,
the ending cash balance.
Right. Yep. Our ending cash balance.
The ending cash balance at the end of each month with the revenue, the taxes, and the expenses that are happening each month. We project what we think your cash balance will be. And you're probably thinking this too, but one of the most helpful things that we can do with that cash flow calendar is put out, hey, there's going to be an upcoming expense. I know that I've got $100,000 that's going to be due in November.
Yep.
And you're telling me that you'd like me to put X into the 401k plan. Well, if I do that, what's going to happen to my cash flow when that $100,000 liability comes up?
Right.
And I've seen you build those in on the fly as we're having conversations with clients.
Yeah, absolutely. Because we love how dynamic that tool is. And one thing that is also on the cash flow calendar that's not on the map is the minimum and maximum liquidity thresholds. The cool thing about that is when we put the minimum threshold in there, it's comparing it to the current bank account balance. And if we get below that threshold, those cells turn red, like, hey, danger, warning. And again, the number one reason businesses go out of business is they run out of cash. So we see that as a very effective tool because it does a couple things. It brings peace of mind for us because we're often looking at tax strategy going, hey, you need to put $300,000 or $500,000 into this strategy, okay? And what happens when we do that is the client has the question, can I afford to do it? So we need to be able to answer that question. And so that's where the cash flow calendar comes in. We say, okay, with everything from the home remodel to the business investment to the tax strategy, you see your liquidity number stays in that safe threshold, okay? And they go, okay, cool. It's my job to keep the business running like we forecasted. But the neat thing is we update that every month with current balances. And so we're making sure that we shift all those expenses around to make sure they align with the right timing. And the client will say, hey, I know I told you that was $150,000. Now it's $250,000. So we just change it. And then we're like, okay, now we need to start pulling some of these different levers to make sure that everything's working. So yeah, very valuable tool. And like we just had a client engage with us this week that was growing nicely, like really growing well. Had $1 million, went and paid cash for a property. And now they've got a $600,000 tax bill. And they're like, I don't know what to do about this. This is a little scary. Where if we would have had a moment to like look at the cash flow calendar, we would have said, yes, buy the building, but let's get some financing lined up so we can get some of those dollars back out and be able to, pay the tax bill versus creating the stress of like, I don't have the dollars to pay the IRS, which can be a not so fun situation. So those are how we utilize the cash flow tools, cash flow calendar. Probably the most dynamic tool, the thing that we're using live with our clients almost every meeting to just make sure that we're on track for all the planning that we've got going on. Good.
Yeah,
We spent a minute there, but I think that was important. So,
I really like the cash flow calendar and the cash flow map, as you know. So I'm
mhm.
not upset that we spent some time on that.
Yeah, good. All right. So, how about tax? Now that we've got all of the tax strategy sort of built out, how about our tax advisor? Because I think tax strategy, it went on the cash flow calendar. It's interesting how we often see clients come to us, and they're usually on their second or their third CPA because they're frustrated. Like, where do I find tax strategy? And we already talked about how CPAs don't do tax strategy. They get the right numbers in the
Yeah,
right boxes, right? I think this is where, again, we think about installing this entrepreneur private office model, and at first the entrepreneur is doing all the work, but now the complexity is getting to the point where my cash flows, I've got some decent free cash flow. I need to figure out where it can go. I need to make sure it aligns with my goals. I can make sure I can, have all the dollars to fund these things. This is where we work hand in hand with client CPAs. Oftentimes CPAs feel threatened by us, but we're like, no. We are here to make your life easier. We are here to get the client organized, communicate information, communicate proactively. Hey, here's the strategy. Here's the things we're seeing. What do you see? It really gives us a three-legged stool that's awfully powerful. When it's just the client and the CPA's trusting that the client's data is good, clients trusting that the CPA's advice is good, and it can be problematic. When we enter the equation, it's like, okay, now we can make sure that the client's communicating all the data to the CPA. We can talk to the CPA as peers and go, hey, here's some strategy we're thinking about. What do you see that we're not seeing? And then we can both communicate back to the client as to why it works. And, then the CPA looks great. They've got a partner that's helping them get the job done efficiently and effectively, and the client's saving more money. So the client's like, hey, this is a win all the way around. So that's how we see the relationship sort of evolving with clients as they sort of move past that $250,000 threshold. And it's like the only time we see a change in CPAs is when we and the client starts showing up with tax strategy that, again, we like to walk. I have no interest in being in, the danger zone as far as like how we're applying the tax code. There's just so many opportunities, like we don't need to abuse it. But sometimes CPAs, our clients are the wealthiest person that they deal with. And so they're confronted with opportunities they've never seen before from a tax planning perspective. And I get it on the CPA side of things. Like if there's an audit, they can get fined by the IRS if, there's problems there. So like from their perspective, they're like, look, I don't feel like dealing with the potential risk that's out there.
Yep.
So we think that risk is minimal. And if you find a CPA that is used to dealing with entrepreneurs, it's not a problem. So the only time we're really interested in changing CPAs is when the CPA is consistently like, no. And then you show up with the tax code and go, here's where it says we can do this. And they're still like, no. It's like, well, okay, this might cost us $100,000. Are we willing to stay with this CPA for $100,000? If not, we'll get you plugged into somebody else that we've worked with, or if you have another option, we're agnostic to the CPA. We've got some great relationships there. We can make introductions, but that's generally like the direction we need to head once we start running into a CPA that's just not open to new ideas.
Sure.
So,
and the tax strategies that we may be employing for business owners, these are not novel strategies, as you said. These are established by the IRS tax code, and oftentimes they just need to be communicated and understood.
Yep, absolutely. Like we have some level 1 tax strategies, like home office deduction and the Augusta rule. Like there's nothing gray about those. We've had some CPAs say you can't do both of them, and I'm like, okay, I could buy that. Please show me in the code where it says I can't do both. Show me where it excludes one if I do the other. And it doesn't exist. We can absolutely do both, but there's some CPAs that are just that for some reason they're like, nope, you can't employ both of these strategies. And it's like, well, that's costing us thousands of dollars in real tax savings. And so I think if we're running into trouble there, what is it going to be like when we get into real tax planning?
So you talk about the CPA you're working with and communicating those strategies. And
Mhm.
earlier we talked about how a lot of times a CPA might make some observations after the taxes have been filed. So
Mhm.
from a timing standpoint, when does it make sense to start having these conversations with us?
Yeah, that's a great question. And this is something we were just talking about. Clients are most interested in talking about tax really 2 times a year. Right around the April 15th deadline, because they usually just wrote a big check and they're like, goodness,
I don't want to do that
I
again.
right, I don't like that. I don't want to do that again. And we think that timing is almost perfect because we can get the client onboarded. We can get a very clear picture of where they're at, everything they've got going on, sort of understand the map, like where are we currently, and then it gives us opportunity to start forecasting and vetting different strategies. Okay, the business is on this trajectory. Let's start looking at some different options that align back with your goals, because that may be the most important thing. There's an unlimited number of planning strategies available to us. So if we know where the client wants to go from a goals perspective, it's easy to start lining up some of those different strategies. So we start vetting those strategies, and then we have plenty of time to fund it and make sure that everything is going to work through year end. Then the other time clients call us is October, November, December, when they're like, oh my goodness, I'm having a great year. I remember the tax bill last year and it's going to be worse this year. What am I going to do about this? This is one of the worst times to call us just because the time frame is so condensed. Now we do a lot of tax work for clients at the end of the year. We get a lot of things going. It's really good work. They're really happy with it. But I think it's fair to say that it's stressful on everybody when we hop in and have to get a clear picture, get third parties involved, get the CPA involved, legal counsel involved, everybody involved to just make sure that the path we're on is a good one. So again, we don't mind doing that, but it's a lot more work, a lot more stress on everybody at that time of year. So
And in addition to stress, I mean, have you seen situations where somebody comes in October and you go, well, we can do the following, but man, I wish we would have talked in April because we could have done X and Y, but now we're going to have to wait on that.
Yep. And so generally right now, April, May, June, the entire toolbox is available to us. At the end of the year, we're really looking at like, okay, here's some level 1 strategies. Like last year, for example, we saved a client about $150,000 just using level 1 strategies. So it's like we can really move the needle there if we need to. And then we can also go, okay, there are a few tools available to us that we can implement in the following year that give us a deduction for this year. There's some retirement plans. There's a few strategies there that we can look at. And so we might identify those and then take a close look at some of the things that we could do this year, that need a December 31st deadline, and we need to compare the two, like which one most aligns with our goals that we can execute on. And so we can cross some of those off the list that have December 31st deadlines if we like some of those that move into the new year. But our options do become less the closer we get to December 31st.
Right.
So let's talk about, Ryan, recently you've been working with a client on the protection side of things. They're doing some estate planning. I think we're probably looking at almost a $60 million net worth, somewhere in that ballpark. And so we've had to start paying attention to where we're at from a legal structure perspective and making some changes there. Can you just talk a little bit about, maybe the level of planning that comes in and the quality of counsel that we want to go look for when we're at that level?
Yeah. At that point, it's not as simple as making sure you have a proper will drafted. Now we're looking at ownership interests in the business, the types of share classes that are involved, and whether we're bumping up against the estate gift tax. And that doesn't happen a lot, but we see it more commonly in our business and who we work with, and other advisors likely do. And so that's, to your point, Pat, that's not as simple as sitting down and saying, well, let's understand that, you've got your will, you've got your healthcare surrogate, maybe you've got a trust. No, we're engaging with an attorney who's going to take a deep dive view of the operating agreement, the ownership interests, the goals, to your point, for the
Mm-hmm.
business, whether, are we trying to build up the business in order to sell, or what's the goal?
Mm-hmm.
And putting together a full-scale plan to transfer interest ahead of time, try to get as much as we can out of the estate as possible so that we can greatly reduce estate taxes.
Yeah.
That's not one meeting,
Right.
right?
Yeah.
That's some ongoing. So we do discovery with our clients, right? And what I
Mm-hmm.
mean by that is we sit down with our clients initially and we understand your goals. We're going to collect all of the information that we can to a detailed level. And at that point, we may identify you have some great opportunities from a legal standpoint, but we need to get on this.
Mm-hmm.
And then with an attorney, now we're doing discovery
Yeah.
fresh discovery from the legal standpoint to say, okay, what are the tools that are available? What makes sense? And then we implement.
Absolutely. And I think you touched on this, but I think it's worth like bringing up, you said most people don't have an estate tax problem. Like right now, we've got about
For now.
$27 million exemption, right? So if I'm worth
Right.
some number less than 27 million, I don't have an estate tax problem. If I'm worth 60 million, I've got an estate tax problem, and this guy's a young guy. The trajectory he's on, it's just going to keep getting worse. So
That's right.
there's some strategies that we can start executing on now, so we can sort of protect all that growth from an estate tax perspective. So you said a comment just a second ago. You said for now. Can you tell me what you're talking about there?
Yeah, I'm talking about the estate tax exclusion sunsetting.
Mm-hmm. Yeah. So right now in 2024, we mentioned we've got almost 27.22 million is the technical number that we've got available to us for a married couple. 13.61 available for an individual. 2026. So the best time to start your estate planning, if you've got a huge estate, is right now. Please don't wait till the end of 25 to call us or your estate planning attorney. They're all going to be too busy. So that's my disclaimer
That's a
now.
good point.
But what does the estate tax look like once we sunset? Where does that number go to?
Yeah, I believe it's expected to be cut in half.
Mm-hmm.
Yeah.
Yeah.
Looking at 7 million.
Yep. And so just a point there. So the estate tax is 40%. So if I've got let's just call it a $30 million estate right now, and I'm like, it's not that big a deal. I don't need to worry about it. And then it gets cut in half and I only get a $15 million exemption. I'm going to have $15 million that's exposed to 40% tax. That's $6 million I'd have to give to the IRS after I die on money I've already paid tax on. So it's like we look at the estate tax as the only voluntary tax. We've got enough runway that we should plan for that and make it something that we can completely avoid. So my encouragement to clients listening that are in that $30 million range and up, like start taking advantage of the current tax code now, because it's
Yes,
we might not have another
because
opportunity, right?
to your point, Pat, there are things that can be done now, even though the exemption amount could drop. There's things that could be put in place now to protect it even after it drops.
Yeah,
But if you don't take those steps soon,
Yep.
and we have a sunset,
absolutely.
you'll be kicking yourself.
For sure. It's one of those things that our whole focus is like, let's be proactive on the planning side versus reactive. Most of our clients come to us because they're experiencing pain in some arena, and they're like, I never want to do this again. Please help me. So we want to make sure that there's not a huge pain point for folks on the estate tax, the income tax, the cash flow side of things. Like that's really our focus. So I think it's interesting as clients move into this north of $1 million range, you hit on it, the estate planning, like having specialists in your arena now matter. Last week, we had an interview with Robin Sears. She's an M&A attorney. She's fantastic. And so it's like, hey, there might be opportunities for you to acquire businesses, to merge, to sell. Like, you need a specialist. Please don't walk down the street and talk to your local attorney that did your will and trust and expect him to do a great job on the mergers and acquisitions. We want somebody that is specialized in these arenas. And so our their level of competency is way up here in this specific niche. They're really good at what they do. You ask them to draft a will or trust, it's probably, they're probably competent, but it's not their best use. They're going to be like laser focused on that one particular thing. And especially now, once we move into the upper realms, our council is really used to working together, and this is where we've moved out of what we'll call the amateur ranks of how we've structured our council to professional status. Everybody's working together. There's a main point of focus in the entrepreneur private office that is making sure that everybody understands the goals. They have access to all the information. Now, who that person is for our clients, it's us, right? Like, we're not filing the tax return. We're not drafting the legal documents, but we're square in the middle of all of those things, making sure that everything is integrated and coordinated. And so we're working with the M&A attorney. We're working with, there might be specific tax counsel, on the transaction that we're working with that is just making sure that, the tax implications of an acquisition or sale are often very complex. And so we like to have somebody that understands those pieces. Again, the CPA firm is beyond the guy that's sitting in his shop by himself. We need a level of expertise that a firm can provide. Same thing on the investment side. You've got $10, $20 million of investment assets. It does not need to be in a target date fund, right? We need to have those specifically allocated, have alternatives, have opportunities that are, beyond what you're going to find on, a traditional investment platform. So
on the investment side, you think about on like an M&A example, and you want somebody who has seen the problems before, and you already described an example of one of those in terms of preventing a $2 million mistake. Yeah. On the investment side of things, at $10 to $20 million taxable portfolio, you want somebody who has seen the problems created by certain claimed tax efficient strategies, tax efficient investment strategies. So we want people on the team that have seen problems before and can anticipate and be proactive.
Yeah, absolutely. And then when we think about like the cash flow side, now we're probably looking at, we think about there's levels. There's bookkeeper, then we have a controller. That person might be writing checks and actually moving dollars around. And then we've got a CFO. And oftentimes there's this concept of like, fractional CFO. Oftentimes that's fancy bookkeeping, because CFOs are strategic in how they're looking at the flow of funds. They're looking at everything from what are we going to utilize for debt? How are we going to optimize all of these different pieces? Now, it's interesting. We work hand in hand with our clients because even we'll say CFOs and controllers know what's going on at a business level, but they don't know what's going on a global macro level for the client. And so we're getting involved in saying, hey, here's all of the factors that we need to be considering. Now, the biggest piece is usually the business, but there's these periphery things that are not insignificant that need to be taken into consideration too. So we think the cash flow just continues to evolve, and then we can all the way get into like audited financials and that type of thing. If I'm looking to exit my business at $100 or $150 million, like, I need super clean books, and I need a second set of eyes looking at it, making sure that everything is in good shape there. So again, it just is continuing to, as the business grows, as your wealth grows, your advisor stack needs to grow. But I don't need audited financials when I'm making $100,000 a year. Like, it just doesn't make any sense. I'm going to be spending $70,000 on my financials. It's all of my money. So, those are all things that we need to be aware of. And like, I just look at our job at Vital. It's so interesting as we see our clients grow. They're all self-made. They all started from that bootstrap, like figuring it out on their own. And their advisor team has just continued to grow along with them. And so we just look at it as our goal to provide resources for people. The podcast is a great way. We're creating some free resources for folks that they can go download and start to utilize. And then we move all the way up to, engaging with us to just help bring a who into your life to manage all these pieces so you don't have to go figure it all out. So Ryan, I appreciate you being a part of the team and helping our clients, not only just grow their enterprise value of their business, but their net worth. And, at the end of the day, the whole goal is to not have a big bank account. It's to live a great life. But, there's something to the challenge of building the business and enduring the trials that come along with it that create a lot of satisfaction. So any final thoughts before we wrap up?
Well, I guess one final thought might be if someone's listening to the podcast and they say, that's really interesting, I'd like to have a conversation, how do they do that?
Yeah, I think the best way is we've got a quick form you can fill out. It's vitalstrategies.com/client. And you can just put your contact information in there, some company revenue, and then we'll set up a time to just connect and talk through, this is what it looks like to work with us. And again, one interesting thing we haven't spent a lot of time talking about here is we try to be the best investment our clients make all year. If a client is paying us $6,000 a month, $72,000 a year, we want to show up and show them, here's where you were at. Here's all of the strategies we executed on for you. Generally, those are tax strategies. Here's the money we saved you. And if it's $300,000, that $72,000 is the best money you spent all year. And that doesn't take into consideration all of the organization and peace of mind that comes along with the tax savings. So yeah, that's the best way to get in touch with us, vitalstrategies.com/client. Or you can connect with us. We're on most of the social platforms at Vital Strategies. So, that's good.
Great. Well, thanks for having me.
Yeah, Ryan, it's great. I'm sure this isn't the last that we'll see and hear of you on the podcast. So, thanks for joining us. Have a great day.
Awesome. Thanks.
You can access the tools and resources we discussed today by visiting vitalstrategies.com/cash flow. Whether you're looking to optimize your cash flow or fine-tune your tax strategy, we've got you covered. Also, I want to remind you to rate and review the Vital Strategies podcast on your favorite platforms. Your feedback helps us spread the word towards our goal of serving clients and listeners by saving over $1 billion in income tax. These dollars are better used in your hands versus the government bureaucracy. Join us again next week for another episode of the Vital Strategies podcast, where we talk with Eric Cruz from Cruz & Co. on how to build and scale a business. We look forward to having you back. In the meantime, thank you for being vital.